Markets are bracing for an inflation surprise, and that headline from the New York Times captures exactly the kind of week that has investors on edge across the globe. Here's what's happening. For weeks, Wall Street had been shrugging off a fragile ceasefire in the Middle East and pushing stocks to new highs. That confidence took its first hit from a red-hot jobs report on Friday. Now, all eyes are on Wednesday morning's Consumer Price Index release, due at 8:30 Eastern. Economists are expecting headline inflation to come in at 4.2%, the highest reading in more than 3 years, driven largely by rising energy costs. The ripple effects are already showing up. Tech stocks in Asia and Europe are in the red. Futures on the Nasdaq are under pressure. Bonds and cryptocurrencies are sliding. The one bright spot? Brent crude, which is trading around $91 a barrel after briefly dipping to a 7-week low on Tuesday. So why does this matter beyond the market ticker? Because rising inflation puts pressure on the Federal Reserve to raise interest rates. And that sets up what could be a direct confrontation between the Fed's new chair, Kevin Warsh, and President Trump, who already preemptively criticized any such rate hike over the weekend. Futures traders on Wednesday raised the odds of a rate increase as early as this fall, possibly by September, and bond markets are telling the same story. The stakes here go beyond stocks. Analysts warn that higher borrowing costs could have widespread consequences, given how much debt-fueled spending is propping up the AI build-out right now, and how much investors are borrowing just to buy stocks in the first place. Ordinary consumers are feeling the squeeze too. Households are gloomy about their finances, already rattled by the economic uncertainty stemming from the ongoing conflict with Iran. Marianne Lake, the CEO of J.P. Morgan Chase's Consumer and Community Banking Division, put it plainly at a conference on Tuesday: if inflation stays elevated for longer, the trend of wages keeping pace with rising prices could be at risk. Meanwhile, there's another slow-moving crisis getting fresh attention. A key Social Security trust fund could run out of money by 2032, 3 months sooner than previously expected, according to a new report from the program's trustees. That would mean benefit cuts of roughly 22% unless Congress steps in with a funding fix. Experts note that the Trump administration's crackdown on immigration could make the shortfall worse, since immigrant workers typically pay into the fund through payroll taxes. On the AI front, Anthropic released what it's calling a safer version of its powerful Mythos model. The new system, named Claude Fable 5, is designed to block hackers from exploiting cybersecurity weaknesses, though researchers acknowledge that questions remain about how effective those built-in guardrails actually are. And in the prediction markets world, Kalshare announced it plans to require some users to disclose their employers, specifically those betting in markets where insider information could be a factor, like wagers tied to company performance or military campaigns. The Commodity Futures Trading Commission is reportedly set to unveil new proposals on Wednesday aimed at cracking down on those same kinds of abuses. Finally, the SpaceX IPO is still on track for Friday, despite a new letter from Senator Elizabeth Warren urging the SEC to pump the brakes. Warren's concerns are pointed. She's flagging SpaceX's multiple share classes that give Elon Musk 10 times the voting power of public investors, a valuation topping $1.77 trillion that some analysts call inflated, and the fact that valuation is partly based on SpaceX's acquisition of xAI, a company Musk also owns, putting him on both sides of the deal. The idea of having Elon negotiate with Elon, Warren told DealBook, makes market analysts laugh or maybe cry. Despite her letter, the offering is still expected to go ahead, with Wall Street anticipating SpaceX will raise more than $74 billion from eager investors. It's a week where inflation, interest rates, geopolitics, and billion-dollar market debuts are all colliding at once, and the data dropping Wednesday morning may set the tone for all of it.